Hi, everybody. Welcome to the FX Street webinars. My name is Boris Schlossberg. I'm the founder of BKForex.com. Today's session is going to be very interesting because it's going to be about this new strategy that we developed called Crowdfighter. And I'm going to share some of the details with you and share some of the philosophy with you. And then feel free to ask me any questions that you guys have. And I'm going to just expand my question box. Hi, everybody is welcome. Everybody can hear me. So just feel free to ask me any questions as I'm going along. I have your questions on a separate screen, and I'll be able to see them, and I'll show you everything that that we've done with this particular strategy so far. So everybody sees the screen well. Everybody can hear me okay. Just one final check. Somebody tell me yes, so that I can proceed in calm and confidence. Okay, very good. Thank you. Thank you. All right. Let's get started. So the only other thing I just kind of want to see, just before I get started, I wanted to see, this one I want to see participants. That's one. I want to see how many of you guys are here so I can see who's here. I have, so many, hey, Ray. Good. I'm glad everything is really good. Well, I'm really excited about this because this strategy is something that we've been working with our BK subscriber base on for a while. Developed it really over the last 3 or 4 months, really since the beginning of the year, been working on it, but developed it over the last 3 months, really refined it. And it's, in my opinion, probably one of the best things we've developed in a long time out of BK. So I wanted to just give a chance and share it with the whole FX Street community. As I said, feel free to ask me any questions. You guys may not know a little bit about us, or you may do know about us, but I'll brief everybody, especially what we do. So at BK Forex, basically, Kathy and I write and cover the Forex market. We're FX analysts and strategists. We contribute to CNBC pretty much on a weekly basis. You may have seen me this morning. We cover the currency markets from an analytical point of view. But what makes us very different is that we actually trade as well. Like, in other words, we don't just put out research or just put out signal ideas. We actually trade our own money on everything that we do. So we're very, very intimately involved in the market. And we try to develop a lot of different strategies. The biggest strength that we have, and the thing that we really focus on much more, I think is part of it is just my personality, part of it is Kathy's strength. Part of it is just because I think we over a long time we've sort of come to the conclusion that nothing else really matters, is we really focus on news. We focus on event risk trading. And as many of you may have known, that news really is the primary driver of price differentials during the day, right? I mean, long term, you have big thematic movements in the currency markets, but on a day-to-day basis, news is responsible for like 90% of the price action. So we focus a lot on analyzing, understanding, and trading intelligent strategies around the news. And this is really how this whole thing kind of came about. So without much ado, let me just show you the idea of what Crowdfighter is all about. Let me see if I can move my... It'd be nice if I could actually move my... Oh, here it is. Okay, I'm a little bit slow. Okay, very good. My PowerPoints are finally moving. So here's a typical FX trading room. Everybody's got tons of screens. Looks a lot like my trading room. I have about 9 screens. How many? I'm actually curious. How many screens does everybody else have? Anybody trade like on 1? Okay, that's good. That's very minimalist of you, Danny. Anybody have more than 3? All right, I'll wait to see what you guys have. But anyways, the point being is everybody, yeah, Richard's got 4. Yeah, that's pretty much average. Markets have a lot of data. They have a lot of data points. They're living, breathing, active things. I think that one of the things that people always forget when they kind of trade is they think these markets are kind of like these static, permanent things that you could just pull the lever and everything will repeat itself continuously in the same fashion. It really doesn't. But there are points in the marketplace where a lot of behavior is very repetitive, right? And one of the things that we've sort of realized over a long period of time, especially in the FX market, because the FX market is the largest market in the world, trades up to $5 trillion a day. It's the most international market, right? I mean, everybody trades FX, from Europe to Asia to North America. You know, like the smartest, biggest capital players in the world trade FX for a whole bunch of reasons. Companies trade it because they need their payroll. Speculators trade it because it's a very highly speculative market. Banks trade it because they want to facilitate trading. But the bottom line is, because there's so many participants and because the market is so huge and efficient, it is probably the most efficient market in the world, right? And one of the things that we sort of realized is that because it is so efficient, the idea of making money from news, that is, you know, news is good, buying on price, or news is bad, selling on price, is actually very often a sucker trade, because both retail and institutional money, for a whole bunch of reasons, tend to chase price post-news into a point of non-profitability. And the other thing that's kind of very interesting about news trading is, remember that when news displaces prices, right? News basically moves prices. And then in order for you to be able to enact on those prices, transact on those prices, somebody else has to be willing to transact with you, right? This whole idea that, like, there is a guy, you know, here's Boris in America, and there is, you know, John in Illinois, and there's Danny in Singapore, and Boris wants to buy and Danny wants to sell to him at the same time, you know, at a mutually agreed price, is a fiction. I mean, that's what we tell ourselves of how markets work, but they don't work that way. You know, Boris sits here in New York, he wants to buy right now. Danny sits there in Singapore, and he may just decide, hey, you know what, I want to sell, but I want to sell at this different price, and maybe I don't want to sell, and I kind of want to, you know, get this idea. And in order to make a trade happen, there's a bank in between that says, hey, whatever Boris is giving me, I'll sell it to him, and whatever Danny wants to you know, to buy, or whatever Danny wants to sell, I'll buy it from him, and I'll facilitate the transaction in order to make the deal happen, because I know on a long-term basis I'm going to make money on both ends of it. So they basically, they're liquidity providers. A liquidity provider is essentially nothing else but a guy who stands between two people who are not quite in agreement on price, and creates a transaction that makes both people want to participate, right? And the reason he does this is because he's very cognizant that because of his size, because of his market knowledge, and because of his ability, he's probably going to be able to make money off both ends of it, right? So what we realized, and you know, when you're talking about news trading, and you're talking about banks trading news, if everybody is buying, who's selling? It's the banks, right? If everybody's selling, who's buying? It's the banks. They're always on the opposite side of whatever is the news reaction is at the time, because that's the only way they can facilitate trading in the marketplace. So is that, first and foremost, I kind of want to just stop here and ask you, is that clear? Does everybody understand what I'm talking about? And if it's not clear, feel free to say no, and I'll be happy to explain in a little more detail. Is there anything that I've said that is not clear to everybody in this room? So Ty, Justinas, Albu, Boyke, it's nice, always nice to see you. Ray, everybody, is everybody perfectly clear on what I'm talking about? I see we have a few ladies in the room, which is really nice to see, Linda and Jennifer. All of you guys pretty much understand what I'm saying, right? All right. Hello. Hey, Ray. Okay, so I'm assuming from your silence means consent, and Jennifer tells me yes. Okay, very nice. Okay. So, markets are efficient. Retail and institutional traders tend to chase price, and banks facilitate liquidity, and they stay on the opposite end of price. Then maybe, the much more intelligent trade is to go on the opposite side of wherever the trade goes, right? I'm going to show you a couple of examples of actual trades that our strategy took. This is the latest non-farm payrolls, which was the 10/3/2014. As you can see, this is a euro-yen pair, and I'm not going to tell you everything that's in the strategy, because obviously I'd like you guys to get the strategy. The strategy is ridiculously cheap. It's $27. I'm just going to put in the URL right now if you guys are interested. But we're taking the strategy down as of today. Today is the last day. It's one of the reasons why I kind of wanted to do this on FX Street, because okay, let me see if I can send this out to everybody. I don't know why I can't send this. Huh. Is there a reason why I can't send the link to everybody? Let me see. Share. What do I want to share? Desktop, application. I don't want to share this. Okay, let me see if I can send it over here to chat. Okay. Okay, hold on a second. Maybe I'm doing it wrong. All right. Hopefully, I send this to everybody, and you guys can go take a look at the webpage. But the strategy is very, very simple. Basically, we trade within like the first 10 to 15 minutes, depending on various currency pairs and the rules. Yeah, I think I just sent this to everybody, so I think you guys should be able to get it. Tell me if you guys have not been able to get the link. I just want to make sure that everybody has the link, that you guys are good. You can look at the strategy. Yeah, okay, very good. Thanks, Justinas. The strategy is really, really extremely simple. Has absolutely no indicators. Only trades price, which is one of the interesting things, by the way, that I'm really, really coming to the conclusion on. This is probably one of the most important things in my trading career that I'm coming to the conclusion on, is that the only thing to trade with any degree of consistency, accuracy, efficiency, and profitability is price. Almost every single, no, as a matter of not almost every single strategy I'm working on right now has zero, literally no indicators on it whatsoever. Every single chart I look at is totally naked. And I love RSI, and I love Bollinger Bands, and I love moving averages, and I love every little freaking indicator that ever lived and worked. But, and this may be a very controversial point of view, and you guys may disagree with me, but I have come to the conclusion after many, many years of trading that they are all suck, not because they're bad in of itself, but because they are a secondary representation of reality. In other words, every indicator is derivative of price, and therefore it's already one step removed from reality. And trading is all about reality. Trading is all about doing what is happening now, not about doing what you think should be happening or what happened in the past. It's all about reacting and doing to where the price is at. You don't get paid on indicators. You don't get paid on your opinion. You don't get paid on your analysis. You get paid on price. So every single strategy I do these days is just pure price based. So this is a pure price based strategy. It's a reactive strategy. So basically the idea is when things react, we buy the lows, we buy the absolute lows, and we sell the highs when it goes the other way. And we try to make our money within the first hour post news event. So here's a good example. You know, CrowdFighter goes long over here at around. In this particular examples, I don't have any prices, but I'll show you a couple of examples where I do have prices. And then it pops back out over here. The other thing that's very important, by the way, is that do not, for any single reason, I think this is really important because a lot of people kind of assume, well, you know, if you're going to be buying lows, don't you want to hold on for a potentially huge turn, right? And that is a big, big mistake that a lot of people make when they're trading intraday news. Remember, the banks are not betting on the fact that the market is wrong, right? The market may very well be right. In other words, here's a move to the downside, right? 5 hours, 5 days, 3 days from now, the price could really be much lower than where it is now, because the market in a long run may absolutely be correct in its point. The banks are not making that bet. The banks are making the bet that the market is wrong for right now. You know how, like, what's the opposite of the of that joke? I don't want to marry Mr. Right. I want to marry Mr. Right now. Well, I don't want to trade Mr. Right. I want to trade Mr. Right now. That's what they're betting on. So their time horizon is very much to our time horizon. They want to flip this thing within 30 to 60 minutes of the pattern, because they've inventoried all these positions. They want to flip those back out for a small amount of profit. They're done. That's how they make their money day in and day out. That is what they do. So we just basically piggyback on their strategies and do the same thing, right? So here's another one. This is UK employment data, where actually the price did move reverse completely, but it doesn't matter. We came in over here. This was the low. We bought the low over here. There was about a half hour later, the lows were tested. We bought the lows again, and then we got out on the trade over here. Here's Chinese manufacturing. We trade that against the Australian dollar, obviously. This tends to be actually quite a good event, because it tends to sort of create this short-term enthusiasm, which quickly gets reversed, and then then it gets taken out. Now, does this work all the time? Hell no. Hells no. Of course you're going to be wrong. Of course you're going to get rolled over. Of course you're going to make wrong moves. But overall, it's a really pretty decent strategy. This is 2014 results. The amount of pips, the amount of trades, the total amount of trades, the total amount of winners and losers. You see how well it did. Really, the only bad month was July, which was a very low volatility month. I mean, generally, let's look at this in more detail, because I think it gives you a very, very good idea of when the strategy works best and when it doesn't work best. What do you notice about this strategy from a bad point of view? Because I think that's always much more interesting to see, like, when the strategy is kind of suffering. What was the underlying characteristics of May, June, and July, right? The underlying characteristics of those months were that there was literally zero freaking volatility. I mean, the markets were as dead as a coma patient, and there was just little movement. And when there's little movement, you're just not going to be able to manufacture pips, no matter how hard you try. So basically, the strategy kind of broke even through these 3 months, right? It made a little bit of money in May and June, lost money in July, kind of just hung out. But that's okay. When the environment is not favorable to your strategy, if your strategy breaks even, that's a great strategy. That's really how I look at developing my strategy. If I can just tread water when things go against me, then when things go for me, when volatility comes back, and as you can see, volatility starts to come back August, September, and now volatility has been awesome in October. We've been this strategy has been just banking it in October, just killing it, because volatility has been great. So we've been able to flip those turns very quickly with very limited, very disciplined, very intelligent approaches. So overall, it's a very high probability strategy, 80% accuracy, relatively decent R&R, and effectively that's really what it does. The word indicator really should not be used. It's really a strategy. We just use the word indicator just because everybody likes the word indicator, but it's an inaccurate description of what the crowd fighter strategy does. It's a strategy. It takes advantage of the imbalance in supply and demand, right? The key thing here is it makes very selective, well-timed trades on event risk. Next week I'm going to write this essay, and you guys are going to get a preview of what I'm going to say. There are, what I call the, what the 3 S's of being a speculator is? 3 S's of successful speculation. Let me see if I can spell the word successful. That would be a miracle if I can do that. Speculation, right? You know what they are? Right? Just like in real estate, the 3 key to success in this, look at that, I misspelled speculation, as usual. The 3 keys to success in real estate is location, location, location. The 3 key successes in speculation is selection, selection, selection. And there are basically 3 types of selection you do when you speculate. Selection number 1 is the size. That's leverage, right? And leverage is a very, very important factor of how you, how many trades have a loss. As you can see, there was only like 19 trades that had a loss and like 55 trades that had a win. I'll go back to that. I'll go back to that slide in a second. But let me just finish this whole idea about selection. So size is selection number one. How much you're going to lever your position. In this particular strategy, the maximum leverage is 10 to 1. So if I have a $10,000 account, every single trade maximum is 100,000 units. That's number one, right? Selection number two that's very important is what are you going to trade? You know, the whole idea of selecting is that you got to choose a particular time during the day when you're going to trade. Otherwise, you're just being random. Otherwise, you're being like every other idiot. You're just coming in, coming out without any game plan. So you have to choose and select particular events. And that's what this strategy is all about. It chooses and selects very particular events. And the third selection is, what are you going to trade it on? It's not enough just to figure out what event you want to trade. It's very important to figure out which currency you're going to trade. So this is the other thing that this strategy does, is it chooses currency. So it basically ties in these three key things that I consider to be very, very important, which is of speculation, which is size, event, and the currency. And those are the three things that I consider to be the success to speculation, right? So it makes very selective, well-timed trades on event risk. Let me just go back because I actually forgot how many trades it lost or won on. So let me just see if I can go back on this thing. So 55 winners, 14 losers, 80% accuracy, 69 trades. This is not including October. October, we probably had another 5. At least we've had about 5 or 6 trades, and I don't think there's only been one loser. So if you want to add to this, it's probably 60 winners, 15 losers. That's probably a pretty accurate description of where we're at this point. Okay? So it never makes a guess, because the one thing that's very, very interesting about this strategy is it trades after the event risk. We never, ever anticipate what the news will be. We always trade afterwards. Been profitable about 8 out of 9 months out of this year, and it does about 7 to 10 trades per month. It actually, I would say, it has the potential to do 15 trades, but it's a very, very selective strategy. It only takes trades when everything lines up properly, so it only does about half of that 15 possible. So it does about 7 trades, between 7 to 8 trades a month. So highly accurate, very good, and it just offers a very, very effective way to trade money. And it's basically a chance, I think, to make money in a very intelligent way, because it's very selective. It is really, really high accuracy, and it gives you a chance to trade the market on a controlled schedule. I mean, one of the things that I think a lot of people have a hard time with is they don't know what to trade, when to trade, and how to trade it. So they wind up just trading everything to very, very negative results. If you're much more controlled in your approach, you generally tend to have results like these, which is, this is the equity curve. This is every single trade taken this year. And you can see that it did quite well, with the exception of here. We did a little bit of a drawdown, right? About 60 points of drawdown. We're kind of stalled, which is exactly what I want. When I'm doing poorly, I just want to stall out, not really, go back and give a lot of money back. So overall, it's I think it's a very, very solid strategy. It's done well. The link that I sent down to you guys basically has the course, all the videos, and the actual EA, the MT4 EA that it trades on. And today I actually put up a brand new video into that webpage that shows you there's a couple of interesting adjustments that we create in the EA that allow you to manage stops, dynamically. A lot of people, like, for example, this thing, I like to trade it basically hard target, hard stop. Let's say, this is not the target and stop in the EA, but let's just say if I'm going to risk 15 points, I'm going to make 10 points, that's it. No adjustments whatsoever. But a lot of people like to adjust, or a lot of people, wanted the freedom to adjust, and the EA has the ability to basically trail your stops and adjust them, dynamically, which makes it a lot, very comfortable for people who want to, let's say, you want to go 7 points in the money, you want to lock in your profit, then you can lock in the profit. I just put up a video that shows you how you can do that as well. But overall, I absolutely love the strategy. The latest trade that we did, let me see if I can actually pull this up. Hang on a second. Just bear with me, guys. Bear with me. I gotta. I'm gonna bring this into the screen. So I'll show you. This is the. Let's see if I can actually put this on here, so you guys can see this, right? This is the. Everybody sees my MetaTrader here, right? I'm assuming you do. So this was euro yen against German IFO, right? It was negative news data. The price went all the way down. Here was the low. This was the high. We bought the low. We bought the low right over here about this is 1 minute chart, so about 10, 15 minutes afterwards, right? Then we got very lucky on this trade because we literally hit the absolute high tick, right? The absolute high tick here. But it was profitable and across a lot of the platforms we trade. This is the Wenda platform, but we traded this on FXEM. And it was just a very, very clean, very accurate, very nice trade. Just banged it out perfectly. And it's a good example of how this thing just consistently, makes money across a lot of event risk that we trade. So I'll open up the floor now to questions if you guys have any. There are no candles. No, I like to use bars when I'm using my MT4. I like to use bars because again, I really don't care. I'm just looking at highs and lows, Boyke. So I really don't care about. I just want to look at the like you can see here. Let me just bring this up. I just want to make sure that I am, that I get my highs and lows executed. I got my low executed here. I bought it, and it took me out. So let me just move this out of the way here. Do I have the wrong thing here? Oh, I know what I'm doing. I pulled the wrong thing. Okay. Okay. All right. I finally got rid of that. Sorry. Had a lot of my EAs on there. Okay. Is it a robot? Yeah, it is a robot, but you do have to configure it for every single event risk. It's not like one of those kind of things where you just set it up once. But what's very good about it, by the way, is the robot itself has a date timestamp function. All right, let me bring it back. Sorry, I'm just having a hard time grabbing all this stuff, and I have so many other things. So let me just make sure. So yeah, so here's it is. It is a robot, right? I'm just going to bring it back here. And what's very cool about it is a date timestamp function, right? So this timestamps the actual event that I want to trade, and you can actually, let's say you have 10 events or 5 events this week, you can do 5 different charts on a Sunday night. Just preset every single variable here, close it out, and it will automatically trade every single event on a date timestamp basis, which is very, very cool. One of the things that I really like about what we did with this particular, EA. Okay. Any other questions that I can answer for you guys? Let me just send you the link one more time. And if you're interested, if you're interested, feel free to buy. Otherwise, I'm open to any questions you guys have. Is it similar to Ajax? It's actually the exact opposite of Ajax in so many different ways. Ajax is a continuation trade. What is guaranteed till the front door? I don't understand what front door means. So ask me what that. Define to me what front door means, because I don't know what that means. Ajax is a continuation, EA. This is actually a reversal EA, so it's very, very different. Ajax uses indicators. This does not. It's a very good complement. It's a really, really good complement to EA. The time frames that this thing trades on is on the EA itself is a 1 minute time chart, but the actual time frames are like a 10-minute, either a 10-minute or a 20-minute time frame before or after the event. Sorry, it's around the event. It's either a 10-minute around the event or a 20-minute around the event, depending on the currency pair and everything else. Sorry, yeah. Joe says it's the opposite of backdoor. Yeah, I don't understand what that means, so I'm not even going to try to to respond to that. So has everything on there? If you buy this, the course is only $27, as I said to you. you have access to this webpage for 1 full year at minimum, and probably much longer. So you have people like always freak out and go, "Are you going to take this down in a day? Do I have to download everything?" No, you don't have to download anything. It's all available there. It's all available there for a whole year for you to come back and view it, learn all the lessons, download the EA, download all the PDFs that you want. You can ask me any questions for a year forward. I prefer to trade this. Okay, Vandermeulen, again, I am sorry, I don't understand what you're saying. So, again, on the calendar, what does that mean on the calendar? It has about 15 lists. Yeah, it tells you, the course will tell you every single event that we trade, and every single event that I think is tradable. And there's obviously more than that. People have expanded it to beyond I pick out just the absolute, what I consider to be the absolute highest probability trades, but you can also expand it to to more general trades, and try to trade it that way as well. I'm actually looking right now, like, could I have traded the euro dollar today against it? I probably could have. I would have made money trading against the euro dollar today because it spiked out and spiked back in. So you could expand it, for a lot of stuff. On the FX calendar, yeah. I mean, economic calendar, right? So what is that? Yes, it trades the economic calendar, which is exactly which is what this is all about. You have about 15 high quality, high probability trades on the economic calendar, out of which about 7 of them usually trigger every single month on this thing. And then if you want to get a little more expansive, promiscuous with your ideas, you can maybe trade as much as 20 to 25 calendar event risks on the calendar. So, and that's all up there. And of course, you can see all the key events. You can there's actually a spreadsheet that you can download on the web page. That does. I'll actually, if you guys want, let me just show you what the web page looks like, so you guys can actually see what the course looks like. Hold on. So let me see if I can do this for you. I think I'm going to be able, yeah, I got in without the password. So you can download the EA over here. The spreadsheet of the prime events is over here. The screenshots of how you would set up every single currency pair is here. And then there's the 7 lessons. Why, what is the thought behind pattern about it? What do we do here? What are the key ingredients that we filter out for? US, European data, how do we trade? UK data, how do we trade? There's basically 4 types of data that we trade: US, UK, Australian, Canadian. Then we do an analysis of the P&L. And this gives me a recommendation of how I would trade the EA in terms of leverage. So I already told you I traded a 10-to-1 leverage. Then there's step-by-step of how you would configure the EA. Then we did a full free webinar a while back, and we recorded that whole webinar. We put that up there. And just now I put up this new video that talks about how to make adjustments to the EA in terms of how if you want to trail stops and stuff like that. So you just click on each one of these things, and a new video will pop up. The only thing I'll tell you, there's no monthly fee. It's just $27. That's it. There's just nothing. And it's all yours. You own it for life. It's we don't do any proprietary, like defense against it. You buy it, you own it for life. It's free. It's the code is actually open. People have translated to TradeStation and everything else. It's open source code. What do I want to say? Oh, the only thing about this web page is you definitely want to view it through Firefox or Chrome. You cannot view this through Internet Explorer is the world's worst browser. I don't even know why people still use it. But the only problem you're going to encounter is if you use an Internet browser. But if you use Firefox or Chrome, this plays perfectly fine, and it's it's a really good web page. Okay. Any more questions? Yes. Okay. Wonderful. So I thank you very much. I hope you guys enjoyed this. This is a really, if you guys trade, I'm actually curious, how many of you guys day trade a day? Like, how many of you trade intraday and look for trading ideas? Have I ever traded longer term? Yeah, we have longer term strategies that we trade. Kathy's, I actually, I don't trade longer term. I mean, I have, the longest term strategy I have now is a 24-hour a day strategy that I trade like all the time. But I really, really like these particular strategies because they're so clearly defined, I mean, like the best profits I get are out of these strategies where I actually just posted up on Twitter saying, investing and trading is the only business in the world where the less you do, the more money you make. The irony of our life is that we always think, everywhere else we have to work harder to make more money. Here, it's completely counterintuitive. You have to work less to make more money because you have to take very calculated risks. And that's really what this is all about. It's all about taking very calculated risks. So I hope you guys enjoy it. And I hope you guys enjoy your trading. And I'll see you guys next month, right? Everybody have a wonderful time. Any final questions? No? Everybody got everything that you got? Okay, guys. So then I will see you guys next month. Everybody enjoy.